Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In this video, we are going to look at a popular stock that many people have in their portfolio. Now this stock's 10-year performance is 1,030%. Hedge funds have increased their shares last quarter, and Warren Buffett also has increased his share. So definitely if you're interested in this video, sit back, enjoy, and do me a favor, like and subscribe, hit that notification, and don't forget to hit that bell so you don't miss out on all the videos that I put out. And as always, please remember that all of this is not financial advice. This is just me sharing. Without any more delays, let's take a look at the company that I want to talk about and see if this is a company that you should invest on, or if you haven't done so, maybe start adding more. So the company I'm talking about is Apple. The ticker symbol is AAPL. So if you're not familiar with this one, I seriously doubt it, but if you're not, it is a company that is known for computers, phones, accessories. So I definitely love this product. I love everything about it. I use Apple products in all my cell phones, so definitely I am a consumer. I'm also a shareholder of this company. Now let's take a look at Simply Safe Dividend. Based on their dividend safety score, they rated as 99, which is very safe. You can see the dividend yield is about 0.50, and you can see the market cap is about 3 trillion, so pretty big market cap. Looking at the key metrics, you can see a payout ratio is 15%, forward payout ratio is about 15%. The dividend streak is 11 years without a reduction. And then if you look at the dividend growth, you can see the last 10 years 9%, last 5 years 7%, and then the latest is about 4%. Dividend streaks 11 years consecutive, uninterrupted of 11 years without a reduction. So if you're wondering when you get paid, if you do decide on investing in this company, you get paid quarterly in the months of February, March, May, August, and November, and then your annual payout would be 96, which breaks down up to about 24 cents per share. So ex-dividend date is about November 11, which has passed. And then you can see from here, based on Simply Safe Dividend, they feel like this is an overvalued company. And then you can see the payout ratios right here, average 5 years, dividend yields right here. 52-week range is a little bit high, getting closer to the 52-week high of 198. And then you can see the payout ratio of 29 versus the IT of 24. And then you got all your other stats here: free cash flows, sales growth, outstanding sales, total sales, return on equity, return on investment capital. You can see 172 for return on equity, return on investment is 61, operation free cash flow, net to debt capita. Switching over now to tip ranks. Now you can see based on their smart score rated as 8, which is outperform. You can see hedge funds have increased their shares the last quarter. And then you can see right here, 10-year performance is about 1,030. Now if you go to the 5-year performance, if you owned this 5 years ago, you still would have been up 408%, which is really amazing and stuff. Now looking over to the upside, they say it's about 5% upside to a high of 203. And the highest they can think they're going to go is about 250, average of 203, and then the latest is 161. Analysis rated as a moderate buy. You can see 15 buys, 8 holds, and 0 sells. So looking down, you can see a lot of the buys and hold, mostly buys. There's a lot of holds in there, so definitely something to think about. Now if we go over to bar chart, based on their analysis, you can see pretty similar. Target of 250, the high one, mean of 205, and then the low of 160. Based on the analysis, they rated as a moderate buy based on 26. You can see moderate buy for the last couple of months. Now if we go to NASDAQ, based on their analysis. There's 30 analysis. They rated also as a strong buy, and then these are the firms. You see Barclay, JP Morgan. You can see other Wells Fargo, Wedbush. Now moving along to Yahoo Finance. So if you want to know the performance of this, you can go by the chart. I compared it to the S&P 500, and this is the 5-year mark. You can see it has outperformed the S&P 500. Even if you go to year to date, you can see it's been performing much better than the S&P 500. Now if we move over to simply Wall Street, based on their share price and fair value, you can see currently at the time of this video is about 192. Fair value based on their estimate using their discount cash flow model, they rated as about 160, which they calculated as overvalued of 20%, pretty much close to 20%. Now if we go over to stock Rover, comparing the risk and return versus the industry and the S&P 500, you can see year one still beating the S&P 500, 3 years. And then the 5-year return, look at that, 100% here versus 413. Now, if you look at the analysis, you can see based on stock Rover, they rated also as a buy. And then you can see the price target is pretty similar with 250 as the high and 160 as the low. And then you got your middle with a 205. Now switching over to Alpha Spread, based on their financials, you can see right here, 10 years. Revenue increased by 124% over the last 10 years. Operating income also increased by 133 over the last 10 years. You got operation cash flow increased by 106 over the last 10 years. And then you can see right here the assets and liabilities, 353 billion versus 290 liabilities. And then you got your cash and investments, long-term investment. And then you got your efficiency right here. So ROI, ROA, and then all the fundamentals right here. So what I like about Apple, definitely if you haven't had this opportunity to get Apple, I would say that I will wait for a dip. So it was always good to buy these companies when they on a dip. So if you're trying to get into it, I would just dollar cost average, maybe buy one, maybe buy two. Again, definitely do your research, definitely see if this is a company that you want to invest on. For me, I definitely am a long-term holder of Apple. I can see this company next 10-20 being a major player in the AI industry as well. You know, they're coming up with their meta visual to go over the virtual reality. So I want to see how that works out. But either way, in my opinion, I think it's a solid company. I definitely think that if you're interested in going to invest in Apple, definitely do it when there's a red day. And then you want a dollar cost average and lower your cost average as you go. Definitely do a long-term hold, in my opinion, just like I've been doing. With that said, thank you so much for watching. Do me a favor, like and subscribe, hit the notification bell, and watch the other videos as well. Thank you so much, guys. Stay cool, keep investing, and I'll catch you guys in the next video.